Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Terra Resource Corp. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Gerald Panneton, Chairman and CEO of Terra Resource Corp, which trades on the OTCQX Best Market under the symbol YGTFF and on the TSXV under the symbol YGT. Welcome, Gerald.
Thank you very much, Matt, and thank you everyone for attending the conference. We appreciate very much your time, and also we thank the OTC for organizing the virtual investor conference. Without waiting too long, we'd like to introduce you to Terra, a Canadian high-grade gold story that is active in the Northwest Territory of Canada. And I'll explain more in detail, but following our current presentation, we have to go through very quickly our forward-looking statement as a public company that is disclosed. You can also find this presentation on our website at goldterracorp.com. Now, when we look at the importance of our company, it's very important to understand who are we, where are we doing gold exploration. And I think what's very important for the investor to realize is the importance of our very simple strategy. It's a safe jurisdiction. We believe in finding gold in Canada. This is where we've been, we're born. This is where we know the geology. This is where we know the potential. And this is where we can focus on high grade. And the main reason we're focusing on high grade gold is because we believe that high grade gold projects go through different time of low grade environment or high grade environment and still make money because it's a better benefit margin. And our district, which covers 70 kilometers, has already produced 14 million ounces of gold at grade of between 15 to 20 gram, or between half an ounce to basically almost 3/4 of an ounce. We believe also that there's gold left at the Con mine, and that's why we signed a purchase option with Newmont, the big Newmont, in 2 years ago in November 2021 to acquire the old Con mine property, where we believe there's gold to the south and gold to the depth at depth. So far, we've done almost, by the end of 2023, 30,000 meters, spent almost $10 million roughly, and already growing a resource that was supposed to be inexistent. And so what's important about our story is that we have a huge land package. We also have a very good asset. We're in the town of Yellowknife, Northwest Territory, and infrastructures are very important. And just to show our track record, we've been progressing nicely in our resource growth, now standing at 1.8 million ounces of gold, 1.2 million ounces to the north of town, and roughly 540,000 ounces combined of indicated and inferred on the Con mine itself, excluding all the drilling that we've done this year, which amount close to 10,000 meters. So in 2024, you can expect an update resources following our continuation of our drilling that will continue all the way through next summer. And of course, followed by a resource update in a new MRE and to show the result of our progress. Now, when you look at the track record, I'm not going to spend too much time, but we've built mine in the past. For myself, 3 of them, Chulawaka, Buzwagi, and of course the Dito gold story, which we took from $100 million US to sold for $5 billion Canadian, finding a lot of ounces. Surrounding myself, because I didn't do this alone, there's a lot of very good people, including Louis Dion, Paul Bonville, Mark Brown, Joe Campbell, that used to be the founder who put the first stint of putting all the things together. We're right in Yellowknife. We like where we are. We have a very big land package, as you can see. We cover 70 kilometers of what we call the gold plumbing system of the gold environment in this area. High-grade gold mined between 2 mines, Giant and Con, closed 20 years ago when gold price was depressed down to about $350 an ounce. If you remember, it follows the years of the 90s where gold was very low. Today, the work that we're doing in a very difficult market, it's a great call option for $10 an ounce. Basically, our company is valued at less than $20 million US with 2 million ounces for roughly $10 US an ounce. A great opportunity to invest into a huge land package that can yield a lot of discovery. But first, let's talk about the Con Mine. The Con Mine is a very important piece of the puzzle. The main reason being a lot of different important infrastructures. You have a mining lease, a surface lease. So we're not the owner of the lease yet, but this is a step forward because you already have a brownfield project, an industrial site, I should say, which already had its footprint of a mine. So you basically could reuse the same footprint and you don't disturb nature elsewhere. We go back on the ground and we use the same place. And you can see there's 20,000 people living in Yellowknife. And because of that, you have access to people going at night and you don't have to travel them. You don't have to host them. You don't have to feed them. Our cost of drilling at surface is barely $200 meters Canadian per meter, which makes our exploration much cheaper. And also, it allows you to realize that when you're in town, when you have all this access to people, to hydropower, to roads, to workforce, the cost of drilling or the cost of operating a mine is move in tandem. We're in town, it's cheaper to operate, cheaper to drill. Now, the potential is quite amazing. The Campbell shear that you see on this slide is very important. As you can see, we signed a deal on Newmont, but let's skip the deal with Newmont. You can always come back and we can always have some discussion about it, but it's public matter. And when you look at it, you can really see the importance of that. So when you look at the importance of the geology, which is very simple, you can see the geology of the Campbell shear straddling in a southwest to northern directions, dipping to the west. And this is a section that we show the geology very quickly, where you have two shears on the Con and the Campbell shear. On the Con mine itself, 6 million ounces of gold have been produced between 16 to 20 grams, while the giant mine, which is the up dip of the Campbell shear of the Con mine, produced 8 million ounces at 22 grams. When you look at all the work that we've been doing, compiling the information from underground working, it's all digitalized. We have all the information in a digital format. And so the compilation was made easy to show the importance of what does it take to have 5 million ounces along the Campbell shear. And you can see it's barely a square that is 1 mile by 1 mile deep, roughly, down to about 1,900 meters or roughly 1.2 miles below surface. And the 540,000 ounces that we were able to outline near surface, near infrastructure, that could be mined earlier in the life of mine cash flow model. So importantly is about potential. So the first question you ask, how many ounces do you have and where did you find it? So our first step was to delineate the ounces near surface because they're cheaper to achieve or cheaper to reach. Excuse me. What is the next target is at depth. So further in our compilation on the mine, we outlined this target at depth below the mine, where we can estimate from the knowledge of the 5 million ounces, which translate into 1 million ounces every 200 meters. So basically, every 200 meters vertical, or roughly every 200 meters is roughly every 600 feet, you have about 5,000 ounces every meter vertically into this mine. High grade mine, 15, 20 grams. What is the potential below the mine? Don't forget, we have a Robertson shaft that was built in the 70s, concrete steel, that give us very quickly access back to those ounces. A shaft of that magnitude will take roughly 3 years to sink at a cost of $120 to $150 million US. So it is an asset on the Con mine that is not negligible. It's very important that our target area at below the mine has a lot of value because already there's an existing shaft that can lead you there. We're only 200 meters. And our first few holes that we drill in this area are shown right there. So this is a zoom that shows our first hole that we completed in mid-October and released the result not long time ago. That shows that the Campbell Shear is still open at depth. It's only 200 meters below surface. And it's right below a stope that was very rich, and we decided to wanted to test that stope. Now, currently, the drill is still turning, and it's doing what we call a wedge, or an additional hole from the master hole, where we're going to be able to go and laterally and then up dip to outline more ounces. This stope that we're targeting 200 meters below had spectacular gold grade. This stope currently has been mined, so it's not there anymore. But the underground drilling information that we gather from this stope shows result like 530 grams of gold over 20 meters, including a zone of probably about 2,000 grams over 3 meters. Up dip, 70 gram over 7 meters, 20 gram over 7, 22 over 12. Very rich zone that shows the potential of finding additional lands of that similarity. And don't forget, you can extend an Archean deposit in geology time down to 3-4 kilometers below surface. These deposits go from surface down to 5 kilometers with no problem. Of course, we're not intending to go that deep, but just the next 600 meters that we intend to do is already showing promise, because the 200 meters, the whole 200 meters below, intersected gold, including 13 grams over 3 meters. And of course, when you look at the intersection, which is below the underground working, you're basically extending and opening up an area for exploration that could yield our target. If we do have 1 million ounces every 200 meters, and our box target is 600 meters by a mile long or kilometers long, roughly, that can yield 2 to 3 million ounces potential. And we just did the first hole in that box. That shows the potential is there. And just to show you a little bit of, you can see the importance of the shearing. And towards the end of at the bottom of the slide, in this slide, you can see that we do have a lot of high grade mineralization right in the quartz vein system, smoky quartz vein with visible gold that gave us our first intersection, which is about roughly almost 13 gram over 1.7 meters. What it tells us, that little intersection, which is almost 6 feet wide, is that it's the cutoff grade. What you need to go and mine on the ground is roughly what we call a GT, gram times thickness. So what is the GT necessary to make money, for example, at surface at $2,000 an ounce versus at depth when it's you need to reach the depth. So roughly at surface, we use 3 gram over 3 meters, but at depth we will be using 7 gram over 3 meters, which is a GT of 21, which is exactly what we have here at the hole. So a technical success that allows us to believe that there is a lot more gold to be found below the mine, and we just need to drill it and continue our drill program. Next is, what else do we have? When I talk about district scale, it's very important people realize the importance of the Gold Terra land package. More than 800 square kilometers, over 70 kilometers along the Campbell Shear. When we talk about the Campbell Shear, always remember the importance of the structure, because every gold camp in Canada, whatever you talk about, Timmins, Red Lake, Val-d'Or, Kirkland Lake, are along one of those big break, which we call usually a sedimentary volcanic contact. Basically, in very simple terms, volcanics come from volcanic eruption or flood basalt and things like this, while sediments are basically caused by erosion and a graben, which means there's been a lot of faulting. And these gold systems migrate or circulate through those cracks and those shear zones. The Campbell Shear is one of those. Exactly. Think about it. 14 million ounces produced over 5 kilometers strike line, over 3 miles. Think about it. We control 50 miles. How many ounces can we find along that system? And we've done some work north of town, for example, where we outline 1.2 million ounces of resource. But the work is not complete yet. I can show you, for example, one of our last hole we did in 2022. We haven't gone back. We only have one hole. But we went back in winter 2022 and extended some mineralization in the Mispeckel area that was discovered years and years ago to generate approximately 3 new zones. And one of those zones is very important because it's showing you the potential of additional small deposit that could be very, it's like we call them satellite deposit. It's like our main deposit is likely going to be the Con mine at surface and at depth, where we can generate, say, 100,000 ounces for the next 20 years. But when you build a mill and you can access to satellite deposit, you can increase your mill size and then add satellite gold deposits such as zone 14 in Mispeckel area, where we intersected 33 grams over 3 meters right near surface, where you don't need necessarily a big environmental permit for that, because you just need to drive a ramp and go underground and mine this high-grade vein and supplement the mill with very good ounces quality. So this is how we picture our company. And of course, at the end of the day, what's very, very, very important that the people listening realize is, we do have a very big involvement in the community. I've been involved in many different projects around the world through my career at Barrick, Detour Gold, and others. And the most important thing we do as Gold Terra is being involved in our community, with the local community, with the local association, with the First Nation, the Yellowknife Denise, for example, the Klitschko. We are close to them to attend. We are a guest in Yellowknife, and we ask our hosts, what can we do to make your life better? What can we do to create job, to generate a better environment for life? This is what it's all about. So we use our commitment to ESG by being very pragmatic about it and being very involved in listening to our host, which is the Yellowknife resident, the First Nation, and of course, everyone in Yellowknife. Now, at the end of the day, our goal is to produce gold. This is our end game, is create value for shareholders. We've done it before, and we intend to do it again in Yellowknife. And we look forward to be able to give a lot of different perspective to our goal. Our goal is to find at least 2 million ounces at the Con mine to justify purchasing the mine from Newmont. And if we don't, we still have our land package to north of town, which has tremendous potential. Already 1.2 million ounces that can grow much bigger. The advantage of the Con mine, that I'd like just to open a small window, which is very important, is that it has a surface lease. So re-permitting a mine in Yellowknife area could be much easier with a surface lease in the Con mine, only if we find enough ounces to purchase the mine and assume the liability of the project itself, taking it away from Newmont, which wants to get rid of it. So at the end of the day, we thank you for your support. I'm now going to go and lead the information on the question that we have, and basically go on answering the question that I see coming into the priority. The first question is about wedge drilling, basically. And how we determine how far first of all, when you drill a master hole, to answer the question, how do we use a master hole and do multiple cut from that master hole, is very simply, mineralized zone have a certain length and extension. At the Campbell, what we have is length that are 50 to 100 meters strike length by 100 meters, by 600 meters vertical depth. So the continuity is excellent at depth. So what we try to do is pinpoint one of those zones and then wedge up to add continuity and confirmation of the mineralized zone. this one was answered. And then I'm going to like to go to the next one, which is, are you going to be exercising the con mine option and pursuing the project? I think I just answered this. Our goal is to get to 2 million ounces. If we get to 2 million ounces, we have enough threshold to build a new mine. What the con mine is going to give us, like I said, is the surface right. So it's quite important to use our knowledge to define that there's 2 million ounces. And if there's 2 million ounces at 10, 15 gram gold, we already have 1/3. And don't forget, there's already 650,000 ounces left in the mine. So our goal, which is another question which is being asked, what are the key milestones in 2024? It's to drill another deep hole below the con mine at 2,500 meters vertical, and then move up all the way towards the bottom of the shaft, which is 1,900 meters. And that hole will cost some money, of course, plus multiple cut. But this will allow us to test the continuity of the Campbell Shear 600 meters below the mine and show the potential with variable cuts and wedges. What we're doing with the master is that we go down all the way, say, to 2,200 meters like we did in the first hole, and then we go back to 1,600 meters, and then we wedge laterally on one side, laterally on the other side. And then depending on which one is the best, we go up from that best intersection. We intend to do exactly the same thing. And eventually, if we do find 2 million ounces, we will be able to basically assume purchasing the con mine from Newmont and eventually put the project back into production. Threshold, 2 million ounces. What's left in the mine? 650,000 ounces, which means we would have a project that is over 2 million ounces, 2.6. And with the 500,000 ounces near surface, it covers basically the first 5 years. Then we had our satellite deposit, like Crest-Oram, for example, open pit, 300,000 ounces at 6 grams, will benefit from being put together and will produce 100,000 ounces a year. Now, another question is, and I hope I was able to answer your question, sir, on our position. Our capital position, currently we have about $2 million Canadian in the bank, which is sufficient to continue our drill program through the winter. And of course, as a junior in this type of environment, in this market, we have to tap into finance and raise money on a regular basis, once or twice a year. We try to avoid dilution. We don't like our share price. And then when you say, how do you value, that's another question, how do you value your company and the catalyst for revaluation? I've been involved in the gold business for almost 40 years. And, once you build a mine like we've done in the past, including Detour, which was a tremendous success in a very good gold period of time, subsequently to the financial crisis of 2008, 2009, we were very lucky. But how do you do it in this difficult market? You advance much slower. You cannot dilute your shareholders. But how do you value your company? It's simple. We have 1.8 million ounces on our book from what we've been able to find. We have a market cap of $20 million US. So you're roughly like a call option at $12 an ounce US. How do you create value from that? You keep advancing the project. We own this project. We don't own the con mine. We can always walk away if we don't like the con mine. The con mine can only be purchased if we find 2 million ounces. But if you find 2 million ounces in town with 20,000 people, and the permitting process will be smoother because you're already working on a brownfield environment, and then you look at the value of your project as you de-risk it. Putting a mine in production from an exploration success to production, like we did at Detour in 6 years, is about de-risking the project all the way through. You may realize the value from time to time in that cycle. Say, for example, we find 2 million ounces on the con mine. What is the value of 2 million ounces on the con mine? Being in town, being with infrastructures, can bring a lot of value to your company. I still remember when I purchased the Detour Lake mine in 2007 at the IPO level, we bought the project and the value was 1.5 million ounces and we pay $75 million Canadian for it. So how come we're only valued at $10 an ounce? It's about the belief or the sentiment on gold. High-grade deposits have a much better margin in general. They need less capital to invest. Like we're probably going to build a 2,000 ton per day mill to start bringing Crestoram and the Car Mine together, producing 100,000 ounces a year. If we have 2 million ounces and the project costs $400 million US, as an example, don't quote me on cost, because cost is a very sensitive aspect of building a mine. You never know until it's complete how much it will cost you. So if you build a mine that costs $400 million and you have 2 million ounces, that's $200 an ounce US. If your operating costs are $1,200 an ounce because you're in town, that means it's 12 plus 200. That's $1,400. Gold is $1,600, $2,000 an ounce today. So that's $600 an ounce margin. And that margin, depending on 2 million ounces, can give you a much better valuation. We are maybe seen as a risky project, but we're in Canada, in a safe jurisdiction, in town, with a very low value. And if we create the value like we've done in the past on 3 mines, we can do it again, because we know exactly what we're doing. We're progressing very slowly, but in a very proper manner. And I'm not sure if there's any other question, but let me know if I did answer your question, and if it is other question needs to be done. Otherwise, I'd like to thank you all for being there today. This has been an opportunity for us to be present at the OTC conference. I'd like to thank again the OTC conference, since there's no more question, and you have to be patient. I am patient and I'm still there. And just for people to know, as an investor in the company, I may be chairman and CEO. I don't have any stock option, and I've already invested something like 6.7 million shares at an average of 20 cents US, roughly. So when you look at my commitment in terms of investing in the company, financing after financing, and discovering and developing gold publicly, transparently through the MRE 42101 recommendation, we are there to create value for our shareholders. And that's what we're good at.